Good afternoon, ladies and gentlemen. My name is Steve Meredith. I am the manager of commercial lending here at the Southwestern Pennsylvania Commission. And welcome to today's webinar entitled Commercial Lending at SPC, an overview of our loan products, interest rates, terms, and application process. Before I get into the meat of the presentation today, I do want to take a moment to talk to you a little bit about what SPC is as an organization. SPC wears a lot of different hats. We're a regional planning agency, we're a metropolitan planning organization, we're a local development district, and we're also a core-funded partner and fiscal agent for the Partnership for Regional Economic Performance. That's a statewide program. We are a core-funded partner and fiscal agent for the Southwestern Pennsylvania area for that state program. So we wear a lot of different hats. It sounds a lot like alphabet soup, but from an economic development perspective, we are here to help Southwestern Pennsylvania's businesses start, grow, and prosper. So where does SPC's loan program enter into all of that? Well, we provide low interest financing for essentially asset-based purchases, land, buildings, machinery, equipment, business acquisitions, or working capital to businesses that are unable to fully finance projects. And I do want to clarify that last bullet here. When I say working capital that's unable to fully, for businesses unable to fully finance projects, I mean that working capital that is related to a larger land, building, machinery, or equipment purchase. Let's give you an example. Let's say, for the sake of argument, you are the owner of a print shop, and you've been printing business cards and stationery and all manner of paper products for however long you've been in business. And then one day you decide that you want to diversify your product line to enter into the screen printing business. So now you're going to be printing t-shirts and hats and all manner of clothing. Well, you're going to need a piece of equipment to facilitate that new product line. And what you can do is take a loan to purchase the piece of equipment from SPC, but you can also take working capital to train your staff on how to use that piece of equipment. So the working capital is related to the larger equipment purchase in the fact that you're going to be using that working capital to train your staff on how to use that new piece of equipment. For machinery or equipment purchases, the only exception is that the machinery or equipment has to be non-rolling stock. That basically means no vehicles. We are not allowed to take the title of a vehicle as collateral, and we do need collateral as part of our securitization for our loans. So moving right along, why do people pick SPC as a lender over another economic development lender or another bank? It's primarily because of our low interest rates. We can be up to 4 points below prime, and right now our interest rates are between 1% and 4%. And that is not only locked in at the time of approval, that's locked in for the life of the loan. So if you're thinking about taking a land or building loan, we can offer up to a 15-year term on one of those loans. For a machinery or equipment loan, we can take a 7 to 10-year term on that, or for a working capital loan, we can do a 1 to 3-year term. Now, the terms of our loans actually depend quite heavily on the term of a loan offered from a private bank, and that is because one of our main loan requirements is that we have to have matching financing from the private sector or through equity. Typically, the way our loans are structured is that we ask the borrower to give us a picture of your total project cost, okay? And whatever that total project cost is, you're going to be required to bring 10% of that total project cost to the deal in equity. Okay, then the remaining 90% is going to be split between SPC and a private bank. Sometimes it's split evenly, 45-45, and sometimes it's split up by the asset. So sometimes the bank will help finance a building and SPC will help finance a piece of equipment. But there has to be a split there because we have to have that matching financing from the private sector. And essentially what you end up with is two separate loans. One from SPC at our very low interest rate, and one from the private bank at an interest rate of their choosing. And over the life of the loan, because our interest rates are so low, you end up saving money in interest over the life of the loan. Like I said, we do need collateral as part of our loan securitization package. Typically, the asset being offered, or the asset being financed rather, is offered as collateral. So if you're purchasing a building, we're going to ask you to take a mortgage on that building. If you're purchasing a piece of equipment, we're going to place a lien on that piece of equipment. So just be aware of that. In addition to the asset being financed, we also require personal and corporate guarantees from any business owner with 20% or larger stake in the business. And there are very rare exceptions made there. We also have an economic development component that is a part of our loan program requirement. And that states that the business must either create or retain one job for every $75,000 borrowed. So let me repeat that. Any business that goes out for or applies for an SPC loan must agree to either create or retain one job for every $75,000 borrowed. And we have some flexibility on that requirement, okay? So if you want to focus on, let's say this is an equipment purchase, and you're not looking necessarily to grow your business or to add any new people, but you have maybe 10 or 15 people on staff. If you want to focus on retaining those 10 or 15 people with this loan, you can do that. If you, by contrast, are looking to expand your business and add new jobs, you can focus on the job creation component. But in any situation, regardless of the life of the loan, regardless of how long the term is, you must complete this economic development component by the end of the first 3 years following the disbursement of the loan proceeds. Okay, so it doesn't matter if you have a 15-year loan, doesn't matter if you have a 10-year loan. If you say you're going to create 3 jobs with the loan, you have to create those 3 jobs within the first 3 years following the disbursement of the loan proceeds. So application requirements. SPC is going to provide our borrower with the loan application, and the applicant must complete all applicable sections. One of the nice things about SPC's loan application is for our internal revolving loan funds, we have transferred that application completely online. Okay, there are actually 3 different pots of money from which we lend. We have for traditional economic development purposes. There are actually 4 pots of money from which we lend. 3 of them are for traditional economic development purposes, the purchase of buildings, land, machinery, equipment, and working capital. And then the 4th is strictly a working capital loan for COVID-19 recovery. And I'll get into that a little bit later in the presentation here. But for our internal funds that focus on economic development, buildings, land, machinery, or equipment, we have taken the application process for those internal revolving loan funds, and we have placed them entirely online. So depending on your total project cost and how much money is coming from SPC, you may be able to complete the entire application online. But again, you must complete all applicable sections. And in addition to completing the application itself, we're also going to need things like 3 years worth of your company financial statements, 3 years worth of your business and personal federal tax return for any company guarantors, commitment letters from all other funding sources. I mentioned the matching financing from the private sector. We will need the commitment letter from that private sector match, that private bank, before we can consider the application complete. From an underwriting perspective, obviously, we're going to need sufficient cash flow to meet the debt service. And then in some cases, we may ask you to take a key person life insurance policy out, but we would only collect on that life insurance policy in the event of that key person's death. Now, if you are sitting there and you're saying, well, Steve, I haven't been in business for 3 years, what do I do then? If you haven't been in business for 3 years, then what we're going to need is a business plan that has been reviewed by a local small business development center and your financial projections for 3 years into the future. We do lend to startups. In fact, we lent to startups just this past fiscal year, which just ended this past month, in June, rather, I should say. We have lent to startups throughout our lending history, so we are not averse to that, but we do need a business plan with realistic financial projections, both of which will need to be reviewed by an SBDC for accuracy prior to applying for the loan. So the loan application process is relatively straightforward. I like to start the process with every borrower with a pre-application discussion. And essentially what that is going to do is that's going to tell me whether or not you're going to qualify for SPC's financing, how much financing you need, and we're going to discuss the general structure. We're going to discuss things like fees. We're going to discuss things like, how much money will SPC be putting forth? What kind of collateral will SPC need on your loan? Things of that such nature. And then once we have that conversation, I will either ask you to connect me with your business bank, or if you prefer, we can try to make the deal work with one of the banks that SPC works with on a regular basis to try to piece this deal together. And we will have essentially a three-way conversation between myself, the community banker at the bank that's providing the match, and the borrower, and we'll discuss structure, we'll discuss collateral, things of that such nature. At that point, we go to bullet point number 2. I will work with you as much or as little as possible to complete the application. If you want to go to town and fill it out and work on it yourself, feel free. I'm always here to help if you have any questions, things like that. But once we get the completed application with all of the supplemental documents back, I will send your application down to our commercial loan analyst, Todd Stranko, who will underwrite the loan. He will probably reach out to you with a list of questions that he'll just ask you to clarify. 9 times out of 10, he has some additional questions. So don't be alarmed if he has some additional questions for you. Just get back to him in a timely manner. And then after that, the loan is then presented to the appropriate review committees for approval. Now, we have 2 committees here at SPC. We have a loan review committee that meets on the Wednesday prior to the final Monday of the month. Okay, typically it's the 3rd Wednesday of the month. Sometimes the way the weeks fall, it's not the third Wednesday, but it is always the Wednesday before the final Monday of the month. And assuming our loan review committee meets and approves your loan, our executive committee would need to meet and ratify that loan, ratify that approval, I should say, before the loan is considered finally approved. Now, that is the process for our internal revolving loan funds. There is a third pot of money that we lend from that is backed by the Pennsylvania Industrial Development Authority. And for that particular pot of money, the state has an additional layer of oversight. So our loan review committee will meet to approve the loan. The executive committee will then ratify that loan. And in most cases with state-backed loans, we will have to send it over to Harrisburg for economic development analysts to take a look at and for PETA's board to finally vote and give their stamp of approval. But once approved, either with internal revolving loan funds or with state-backed funds, closing will occur with SPC's commercial loan servicer, Sarah Francis, and that will involve her gathering some final documents before we can close the loan. Things like business insurance, things like your bylaws, things like your officers' bylaws, or rather, I should say, certificate of incorporation, things of that such nature. But once all of those documents are taken care of, obviously we will send a commitment letter out to you. We'll get that commitment letter back. And once we get the commitment letter back, we'll draft up the closing documents, we'll schedule a closing appointment, and we'll move forward with closing the loan. So that's the application process in a nutshell. We do have a few applicable fees. One is an application fee that is due at the time that you submit your application. That is equivalent to 1% of SPC's loan amount, okay? Not the total project cost, just SPC's loan amount, 1% of SPC's loan amount. We also have an annual servicing fee that is due on the anniversary of your loan closing date, okay? And that is equivalent to half of 1% of the outstanding principal. So as you pay that loan down, that annual servicing fee is going to go down. Now, once you get that loan principal balance under $50,000, that annual servicing fee becomes a flat $250 fee that is due at the time that is due on the anniversary of the loan closing until the loan is paid off. Okay, and then finally, the legal fees are the responsibility of the borrower, and these are for the preparation of the closing documents, UCC filings, etc. Now, one thing I will say is we recently were able to get loan closing templates from our counsel so that we can actually, for our internal revolving loan funds anyway, we can draft the legal documents in-house. That is going to drastically reduce the legal fees that you are responsible for. But you will still be responsible for things like if you're buying a building, there's going to need to be a mortgage filed on that building. Different counties have different mortgage fees, mortgage filing fees that you'll be responsible for. And our attorney would have to prepare that mortgage before they can file it. But again, these mortgage filing fees, these UCC filing fees, they are to the tune of $84 to $125 as opposed to what our legal fees used to be, which was in the thousands of dollars. One of the things that we were trying to do when we asked our attorney for these template documents was really cut into the legal fees so that the upfront costs that the borrower was responsible for were not very burdensome at all. So I think that we've done a good job of that. I think we've made our loan program extremely affordable for small businesses, and that's sort of a feather in my cap there. So moving right along, I do want to talk about our COVID-19 recovery loan program for just 1 minute. We revamped the program recently to begin lending as of July 1st, 2022. The new criteria is below. So if you are a business that has been adversely affected by the COVID-19 pandemic, if you're an eligible business with 50 employees or less, you can apply for up to a $150,000 loan. Now, $150,000 is SPC's portion of the total project cost. That's the max we can lend. The proceeds can be used for payroll, rent, mortgage, utilities, or inventory purchases. Once again, as I stated with the other loan programs, we have that 50% matching financing requirement. And again, we're going to ask for 10% equity from the borrower, and then we're going to ask for some private bank financing. The private bank financing can be matched with either a private bank term loan or a private bank line of credit, okay? SPC's loan, SPC's COVID-19 recovery loan is a term loan, but it can be matched by a private bank's working capital line of credit, okay? Interest rate is going to be set no lower than 4 points below prime. It's going to have a 5-year term, and there's only going to be a flat $250 fee due at the time the borrower submits an application, okay? So we try to keep, again, the upfront costs relatively low so that this fund can help you get back up on your feet. Really, what we're trying to do with this COVID-19 recovery loan program now, since we've revamped it, is we're trying to help people weather the storm of low workforce participation and supply chain delays. So if you are experiencing either of those setbacks as a result of the COVID-19 pandemic, I would urge you to reach out. And speaking of reaching out, there is my contact information. This phone number here, this 412-391-5590, extension 325. This is my office line. I am in the office 2.5 days a week, and I'm out of the office working from home 2.5 days a week. So the most surefire way to get a hold of me is probably via email, smeredith@spcregion.org. The other thing I want to plug here is that we have our, as I mentioned, we have an online loan application portal for our internal funds. But this online loan application portal is very helpful because it also includes a pre-application questionnaire, okay? If you go to this website, spcregion.portful.com/workflow, you can sign up for a free account, and then what you can do is you can take one of our pre-application questionnaires, and that will give me an idea of how much money you need in financing, whether you can meet SPC's lending requirements, things of that such nature, and it'll give me some information about your business as well. How long you've been in business, what your EIN number is, where you're located in the southwestern Pennsylvania area. And if it appears that you are eligible for SPC financing, I will reach out to you within 72 hours of you submitting that pre-application questionnaire. But again, you go to spcregion.portful.com/workflow, you sign up for a free account, you fill out the online loan pre-application questionnaire, and then if you're eligible, I'll get an automated email and I'll reach out to you within 72 hours. And then finally, I always urge anybody that goes on these webinars to please connect with me via LinkedIn. Always enjoy meeting new people via that social media and facilitating discussion that way. So without anything further, if anybody has any questions, you can feel free to drop them in the chat function. Or if you have a microphone and you'd like to unmute, you can always unmute and ask me the question live here. So I'm checking the chat feature, and it does not look like I have any questions right now, but I'll give it another minute or two if anybody has any questions. All right. Well, hearing none, I do want to thank you for participating today, coming to this webinar. This will also be available. I did record this webinar, so this will be available on our YouTube page in the next couple of days in case you missed anything crucial or you'd like a refresher on anything as part of that occurred during the webinar. And always, if you want to ask me questions offline, feel free to reach out. Thanks very much and have a great day.